2020 for trading, I would say. What we're looking for is the stocks continue to bounce up higher from the Iran tensions that Donald Trump has self-imposed on the world by using his Reaper drones, his very close circle of yes men. He's decided the best way to deflect away from the impeachment trial is to go and start killing some Iranian generals, and kind of bring the world a little bit closer together, as we all hoped, that he would. So, I mean, at the end of the day, it's all about assimilating information and data and understanding what that means to the market. So, initially, the markets decided to gap down and sell off, but as we've seen, in the stocks going back throughout the chart, all you have to go is to a daily chart and see that there's been no real effect to the 1%, to the controlling members of the stock markets. Remember, everybody like Zuckerberg, Bill Gates, Elon Musk, it's all in their interest, their companies to be worth more money. They have more money than the rest of the people, so they keep buying their stocks, and general stocks stop the markets crashing. So every time we've seen the markets reject here, prime example, the market's gone higher. Markets again have tried aggressively to sell off, get to these lower ranges, and let the markets correct to a more normalized range. But what we're seeing is dip buying, dip buying, dip backing, market going higher. So every time you see a piece of news or something negative that traditionally would be to stocks, all you have to do is look back to the last, I don't know, probably 7-8 years of trading and decide that yes, the markets have been low, but they want to buy low and continue to go higher. So record highs, I guess, is still the theme of 2020, and I don't see why would you fight it. Why would you fight against the 26 people that have more money than half the population of the planet? So it's just a simple numbers game. Less people have more, therefore your mom and pops aren't dumping stocks, therefore they're not going down, not finding value further down and trending further down. So it's buy low value, and you can find that on your hourly charts, 15-minute charts. It is particularly difficult to see the DAX. Well, again, was a prime example. All over the place. Market gaps up, gaps down. Island formation that you don't see very often. Two gaps that aren't closed, but the market hits back down to previous lows, down to these daily, monthly resistance points, and it's just green, green, green. Consolidation, bit of profit taking, green, green, green. So there's no real kind of doubt in my mind that stocks are going to go higher. There might be some more news, there might be some retaliation from Iran, there might be some more aggressive rhetoric from Donald Trump, but at the end of the day, let's face it, Donald's an idiot. He's doing things, saying things on Twitter, saying that he can bypass Congress, he can't, saying they can bomb cultural sites, he can't, and he just basically is trying to get away from this impeachment trial. And I don't know really why he's trying to do it, because I don't think he wants a second term. I don't think he'll run for a second term. I think he'll do a deal. I think he's got some secret fund with Putin, all kind of other millionaires and billionaires that he knows. And he's made a ton out of the stock market and controlling the Fed. So he just wants to go back to playing golf and not do the difficult job of being president. So really, how high can the stocks go? Again, when you see the major correction happening, it won't be because of economic terms. I don't think it won't be because of political tensions. It'll be because the 1% have finally decided to liquidate. They've got enough money now to protect themselves, and they'll be getting out of long positions. That's what will trigger the major correction. And again, we've had plenty of arguments between different commentators, Bloomberg and the likes, and different people, the industry experts. And yeah, a crash is coming, but it'll come at the least expected time, because we've had quantitative easing for the best part of a decade, ultra low interest rates, and we've had every bit of bad news from Brexit to Trump being president that could have sent the stocks down, and they haven't. So at the end of the day, the only logical reason for why the markets are so high is because that there's a small number of people that can controlling them, and it's backed up by the Fed, it's backed up by governments, so they can't really fail, can they? So on this respect, you wonder why gold's so high. Well, if tensions are flowing up again, gold is a safe haven. So we saw again the same scenario. Gold gaps up on the Iran news, gets back up to a daily high up at 1558, and then immediately comes back down. Bit back to the kind of fibs that the iView draws, where it really sees values, and we do kind of almost close the gap. So again, we're a bit of no man's land with gold right now. the way markets have traditionally worked is that when the markets see that there's there's very little risk in the markets, the risk on. So stocks go up and gold goes down. So why have we got gold getting back to 1600 and stocks at record highs? It doesn't make sense in economic terms. But again, it's because there's so much money flowing around in the world that people have to put their money somewhere. So gold is just an attractive physical commodity that people are just putting the money into. So when you look at the daily charts, we saw gold really kind of making this, kind of almost channel type, down movement. So yeah, technically, it had every opportunity to break back up. And again, my kind of long-term view, when you look at the kind of monthly chart, is that gold really, should be heading down to $1,000. If stocks at this point here, are making record highs, and Donald Trump's going to make the economy the best it's ever been. The world's ticking along. Okay, a few more problems with the trade wars and China, but again, all created by Donald Trump, all created by one person. He's the only person that's creating this uncertainty in the global economy. We're happy to put up with China and it's made up data. And it's made up, kind of predictions on GDP and where it's going to go. But everyone was buying into it. The pie was getting bigger, so people got a bigger part of that slice of that pie. What Donald Trump has done is made the pie smaller, so America might get a bigger slice, but it's a smaller pie. So it doesn't really make any sense for the longer term. When you look at any kind of trade war in the past, you have to go way back, to the 40s, and that's accredited for the Great Depression. It's accredited for the US entering World War II. It's lots of bad things happen when there's trade wars. So gold really, for me, at this point, if stocks were going to continue to go up, which they did, gold should have come down, but it didn't. So it just goes to show that it doesn't matter about normal economics anymore. It doesn't matter about correlations, that you just have to go where the money is. So go where the money is. And when you've got, Egyptian billionaires putting half their fortune or the majority of their fortune to gold because they think, it could only go up, well, it means everything can only go up. That's what we're in right now, the bubble of everything. Everything is going up because there's so much money and no one has to pay it back because there's pretty much free credit globally wide. So gold, as I say, realistically for me, a big test above 1600. We're just going for round numbers now, and above that, yeah, maybe new highs in gold is the kind of call for 2020. I guess if Elizabeth Warren or someone kind of less stock market pro is going to be president when Donald Trump is leaves or is kicked out or is impeached or whatever happens, he isn't going to do a second term. He isn't going to do a second term. He doesn't want to do a second term. He's made his money, so he's out. So whoever comes in, could trigger another run on gold because the stock markets might be, kind of more heavily kind of investigated, kind of taxed or kind of not supported. So that's the main reason why gold, I think, will go up, because of money being pulled out of risky investments like stocks, because gold is seen to be a safe haven. But again, what goes up will come down. 10 years ago, people couldn't give away gold. But this is the way it goes. Again, markets go up, markets go down. It's all about picking and choosing. So other kind of, scenarios, we've got the pound. I've said this for a long time, is the best buy of a generation. So we see the reaction to Boris getting the majority. Then immediately it sells off because Brexit is still bad news. So all the uncertainty is where you're buying down here, that democracy has to come through in the UK, and any information leading to any kind of result in Brexit, be it a no-deal Brexit, I still thought was positive for the pound, because anything known is better than the unknown, and that's what happens. People start to get involved here, then the speculators get in here, then the market consolidates, and then profit taking is here when the market jumps to the highest. So okay, we've got that gap closed, bounce back down, and we're kind of a good point against the dollar. We're still above 131, and I think easily when we start doing trade deals and the real kind of pain and kind of realization of the EU being divorced, is going to lead to a big run on the euro, and the pound's only going to get stronger. I still believe 142. I've said it for years. When Brexit actually happens, if we do these trade deals, I don't think that's too far to see. And again, depends who's in charge in America. If Trump's still in charge and anything bad happens, he's going to be cutting that rates. He's going to be, kind of forcing the Fed, to kind of, bolster the economy by making borrowing cheaper. So that dollar's going to come down. So again, I mean, this isn't really, this is just kind of stretching out what can happen over the next kind of 12 months, but really it's where the money's made in the intraday trades, and that's on your, your hourlies and your 15 minutes and 5 minutes. So again, look for your levels. Like in iView, the market bounces back to this big part of consolidation. Buy it low. Buy it back to the 50% here. You're looking for the market to aggressively buy back down, be as red as it can, and then buy it. Look for it to go green or neutral, then get out, and then buy it as the market goes back up to these higher levels and where you think it's going to go. And that just applies to every single market. Again, the euro, again, at every high point, he's selling it because, we're still talking about, years and years of low rates in the EU. We're still talking about so many problems, with that Draghi's just left, so many unanswered questions. Again, it's worked. The central banks have worked that the system didn't collapse and fall down, but it isn't growing. It isn't creating that growth that all this quantitative easing and low rates was meant to. So the euro, for me, is still in a very precarious position. And as I said, just look at the red daily candles. There's plenty more. There's plenty of big bounces coming in, by central banks and by big speculators, but every time they bounce, they get sold back down. So really, for me, it's just consolidation. The market has already decided that the euro isn't going to overtake the dollar. The euro isn't the currency of the future, and now Brexit's happening. It's D-Day. There could be contagion. There could be other countries looking to leave the euro, and again, dollar strength may be wavering, but I don't think that people are going to jump from the dollar into the euro now, because they jumped from the dollar into the euro when Trump got in. So they've all been kind of already burnt by that, because Trump turned out to be pretty successful from an economic standpoint, just because he's borrowed a ton of cash and he's done whatever it took to keep the stock markets high and stop the wheels falling off. Doesn't mean that won't last forever. But again, all those people, switching from the dollar to the euro are going to be worried now, because Brexit is a reality. Brexit's going to happen. So I still think, we're going to get to parity in the euro against the dollar before anything. I think that's really the test that's going to happen when Brexit happened, that it isn't just going to be business as normal for the EU. There are going to have some tough questions answered, and I think the UK, being well connected with the US and relatively rich and a lot smaller than the European Union, has opportunities to do something. And I think currency speculators will see that, and I think the pound will greatly appreciate against the dollar and the euro. But I think the euro is the one that's going to feel the pain first, and the euro is going to sell before everything else kind of explodes upwards. So really, the dollar, again, has shrugged off any nonsense about what's going to happen with Iran and whether they're going to strike back. You can't see the dollar being weakened until the Fed say it. It's not going to be speculators. It's not going to be other world central banks that tries to hit the dollar on this kind of uncertainty. It'll just be down to policy and Fed. So really, again, I think there are very good levels to buy the dollar, especially against the Japanese yen back to 110. And if it was going to kind of really hit rock bottom, again, it would have done it, I think, by now. I think we'd be further down the range. But really, there's been plenty of opportunities to build these longs back up. And I think it's just a natural kind of where we're going to get one more wave, maybe a slightly lower. We're not going to make a new low here. The market's just going to get back to all these levels and back to 114. Again, against the yen anyway. I mean, it's a safe haven in air quotes, but it's an aging population. It's a battered economy. All the stocks are owned by the government, and you don't have people to fill the jobs. So, I don't think, anyone's going to be jumping back to, Japan for the economic model of the future anytime soon. So realistically, the kind of mantra I've still got is buy the dips in stock. And if you see any kind of, big news events that send stocks down, you still be buying the low and averaging in and buying for the dips of the 50%. Gold, I still think it's got every opportunity to make higher, but I'm still happier selling spikes in gold up until 1600 rather than buying into it. S&P's the same, just buy the dips in stock, sell the euro high because of that inevitable Brexit hangover, buy lows in the pound whenever you see it, because I think a deal's going to be done. I think it's going to be a lot easier to do trade deals than people think, and buy low points in the dollar, because the dollar is still the currency of the future. Not the future, but it's still the world's currency. All the commodities priced in dollars, everything's priced in dollars, and let's face it, there are just so many more dollars in the real market and in the black market for it to fail. Any currency, of countries that you think are a bit dodge, you can always go there and, kind of trade in dollars. So that's not going to change anytime soon. It's not going to be replaced by the euro, and it certainly won't be replaced by the pound. So really, this is what you have to kind of do right now. I used to say it was 80-20, kind of fundamentals driving the markets, 20%, 80% technicals. It's mainly 50-50 now. So you've got to get an idea of the sentiment, what people think is driving the markets. Is it going to be driven by the dollar strength or weakness? Is it going to be driven by fear? Gold going up or down on the risk. Is it going to be driven by stocks, by greed, out and out pure greed, by the 1%? Or is it going to be driven by new situations like Brexit, trade deals, positivity, where there was only negativity before? Once you're going to put all these things together, you're just looking for 10, 15, 20 pips to be in, to be out on the 15-minute, the 5-minute charts, and then don't just kind of be sat here waiting for the market to sell off. You've got many opportunities to be in and out, buying and selling, being market neutral in any, kind of longer term move. And that 4-hour move, you probably have 5 or 6 opportunities to sell, probably 2 or 3 to buy some dips and take out some profit. That's how trading is done. You're not investing in the short term. You're trading, getting your money in, getting your money out. That is how trading is meant to be done. So if you want my mentoring, just open an account with Black Bull. You'll be able to see the links all over my site, steveruffley.com, all over YouTube, and you'll get 500 to 1 leverage. You get my mentoring. You'll get my more kind of in-depth calls. These are just going to give you an insight of what I'm thinking before the next trading day. I do trade a bit in the Asian markets, but generally the majority of moves happen when everyone's up in the UK, and certainly when the US Open happens in the afternoon. So anything else, get me on Skype, Steve Ruffley. Get me on Twitter at Steve Ruffley. Google Steve Ruffley. I'm not a difficult man to find. If you want to make some money trading, I'm probably the only person in the entire world that can help you do that who's completely and utterly free. Right? And people ask me why I do that, because I mentor people, and then on average I turn one person or who's consistent trader into a fund that I back or get backers for, and that's how I make my money. And it's big money. So I can do that. I have to kiss a lot of frogs, but that's the way I make my money. So at the end of the day, if you think you're consistent and want to be a fund trader, go on to the next level, that's fine. I can help you do that. If you want to just be a normal trader, make some money from the markets, I can certainly help you do that too. Okay, guys, take it easy, and I will speak to you hopefully tomorrow.